2022 was probably one of the hardest years in the mortgage industry besides 2008. Not just for lenders and realtors, for people who got pay raises through the pandemic and they had a goal to buy a home in 2022. But then February happened. In February, mortgage interest rates went from 3% to 4.5%, and now we're in the 6.5%. It knocked out everybody's goal to become a homeowner. Guess what? You are not alone. 2022 is over, but 2023 is here. So let's hit that reset button and let's restart 2023 with this is the best strategy for you to buy a home in 2023. What's going on, guys? My name is Min Win with What's a Mortgage. Welcome to our channel. The goal of our channel is to simplify home ownership. If it's your first time tuning in, do me a huge favor. Hit that subscribe or notification button so you are notified every time we go live or post new content. We go live every Monday night on Facebook and YouTube at 9 p.m. and we post content daily on Instagram and TikTok. If you are not following us on our other platforms, please go ahead and do so. It does help us out a lot. Also, if this video brings you any value, please like the video and share this video with anyone you know who's trying to set a goal to buy a home in 2003. Oh, whew, that was a mouthful, guys. What's going on, fam? So I'm going to go over the best strategy to buy a home in 2023. We're going to kill it. We're going to get a home. But what's the most important thing that we all want as a homeowner? What's the goal when financing a home, guys? The goal is what? Qualifying for the most, okay? Right now, homes are going up in value. They're still holding steady. What's up, Julia? How you doing? The home values are staying steady, but we want to qualify for more home. People aren't happy, okay, with what they qualify for. We want to get the lowest mortgage payment and, the most importantly, the lowest price, okay? So that is the goal when you finance a home. It's different when you pay cash. When you finance, you need to qualify. So everyone wants to qualify for the max. Most people don't. Most people, when they qualify, they get let down, they get heartbroken. That's why they didn't buy in 2022. A lot of people sat on the sidelines because they just didn't qualify for what they want. But an opportunity, a little window is probably going to open up in 2023, and you want to be ready. And of course, as 2023 rolls by, we're also looking for the lowest mortgage payment. Okay, we don't just want to buy a home to buy a home. We want a payment that we can love, right? I always talk about love the payment before you love the house. So we're gonna go over how to get the lowest payment, and last but not least, can you really time the market and find the lowest price? There is a way to do it. And for you to find out more, on Wednesday night at 6 p.m. on December 14th, we are going to go to a deep dive of today's subject, which is how to get the best strategy to buy a home in 2023. So we will be doing a webinar at 6 p.m. Wednesday, Pacific Standard Time. The link is in our description. Go ahead and sign up, and I'll see you there. I have dinner around 6 o'clock. So if you have dinner around 6 o'clock, bring your dinner to the Zoom, right? I'm going to be eating my noodles, right? My non-shim. If you don't know what non-shim is, you better ask someone who really eats noodles. They also got it at Costco too, okay? But Wednesday night, we're going to do a deep dive of how to use the best strategy for you to buy home. We're going to talk about how to qualify for the most, how to get the lowest payment, and get the lowest purchase price. So don't forget, share this link with someone that you know that's gonna buy a home in 2023, okay? So before we use the best strategy to buy a home in 2023, we wanna go through the 3 phases. These are the 3 phases that you wanna do to get ready to get the best deal on the block, okay? We wanna make sure we get qualified. We're going to go over the type of qualifications you got to get. We're going to go over getting on the right home search. The right home might pop up and you were on the wrong home search and you missed out and someone else came in and jacked the house from you, okay? And last but not least, to get the best deal in 2023, you're going to need help from the seller. But of course, if you wait too long and the seller realizes, oh, it's a seller's market, you ain't getting, right? And you might not get the best deal. The only way to get the best deal is have the seller help you. So of course, to utilize the best deal, these are the 3 phases you want to make sure you complete. And we want to complete it sooner than later. That's why you want to work with a lender that has a game plan following the 3 phases so you are ready to get your dream home in 2023, right? We all want to meet our goals, and the only way to do it is to be well prepared. So to get the best deal, we got to know the credit score you need to have to get the best deal. So these are the ideal credit scores you need to buy a home in 2023. If you're going with a jumbo loan, 720 plus. Conventional loans, 740 plus. There's another type of conventional, 680 plus, which we'll go over in a second for home ready, home possible. And then FHA, VA, USDA, government loan, 660 plus. Okay? The reason why it's important for you to know these credit scores, so when you verify credit, which we'll talk about in a second, we need to work on getting your credit there. And in our Wednesday Night Live, we're going to go over strategies to improve your credit score so you are ready to take advantage of the best home buying strategy in 2023. Okay, so don't forget to check out that link. So, jumbo rates. Okay, if you want a smoking deal on jumbo, 720. You want the best deal on jumbo, I recommend a 760. Conventional 740 plus, you're going to get the best deal on the block. Okay, conventional 680. So, FHFA just released a rule for Fannie Mae and Freddie Mac for conventional loans, home ready, home possible. You are able to utilize a conventional loan with a 680 credit score, less than 20% down, and get the same interest rate as a buyer putting 20% down with an 800 credit score. That means you can go conventional down to a 680. There's no risk adjustments. That means they're removing the risks of you being a first-time homebuyer with a low down payment and not great credit. So now it's kind of like you are in the same playing field with these people with 20% down. Okay? So it puts you in a good position to get a banging deal. Also, with a conventional loan, another thing that helps you out, the PMI falls off automatically. So if you buy with a conventional loan, your PMI will fall off once you've paid down your principal or gain a certain amount of equity. To qualify, of course, for this specific range or specific program, you need to be under 100% of the area median income. In a high balance area, it's under 120%. We're going to go over this also in our live on where to find out, add this to the thing, Andy, which we didn't add, where to find the AMI, where to look it up to make sure you're under 100%. Okay, we're going to go over that. So definitely, guys, check it out on Wednesday night. We're going to do that breakdown. But now we know to get the best deal, we need to get our credit in that range. And to do that, we got to run credit. I don't want to run credit. We'll go over a second. We'll give you a way around running your credit and hurting your credit score, okay? So, of course, if you want 100% accuracy, you got to go with the hard credit pull, okay? A hard credit pull is when a lender runs your credit are 100% accurate. They use FICO score 2, 4, and 5, and they use the middle score of the 3. Credit report is good for 90 to 120 days. A hard pull affects your credit by 10%. A hard credit pull will affect your score, but it also will also show you all your liabilities. If you are trying to close sometime early in 2023, you got to do a hard credit pull. A hard credit pull gives you the most accuracy. There is a new credit scoring model called FICO Score 10T, which is a little more flexible for some buyers to buy a home, but that is not out yet. Of course, when it's out, that's why you got to follow What's a Mortgage. So when it is out, you will be the first to get notified. So if you're trying to buy, you want that accuracy, you got to get that hard credit pull. Okay? So there's no way around it, because you can't use your credit report app. You can't use Credit Karma. You can't use your credit. I said credit card already. You can't use those apps. They're not accurate. All right. I'm sorry to tell you that. Until now. Okay. So if you want to know where you stand, so you can start working your credit to get to the credit ready to utilize the best home buying strategy for 2023, you can do a soft mortgage credit pull. So check out this soft mortgage credit pull. Credit pull is when a lender runs credit with about 90% accuracy. I'm cool with the 90% accuracy, pulls credit with one bureau instead of all three. The credit report is good for 90 to 120 days. The soft pull does not affect your credit, but will show all your liabilities. And they use FICO score 2, 4, and 5. Okay, that's really important that you want a lender to do it so you can get FICO score 2, 4, or 5. Because if you use FICO score 8 or Vantage score 2 or 1 or 5, it won't give you the score you need to have the accuracy to know where you stand to utilize the best home buying strategy in 2023. Okay, so you got to get approved. So if you really want to buy, it's on your goal. Okay, there is no obligation. Don't be shy guy, shy girl, or shy person. I don't want my credit ran. If you are serious about home ownership, you got to do at least a soft mortgage credit pool. Cool pool. Let them see your credit. Let them see your income. Let them see your asset so you see where you stand. So when that right rate drops or the right price of that home is in your view, you're ready to pull the trigger. Okay. You know, oh, let me go ahead and get approved. Someone else is going to nab it up if rates pull back. So you want to make sure all this is done up front if you want to utilize the best strategy for 2023. Okay. So now that we know where we need to stand, we pull credit on a soft pull, which doesn't affect your credit score. You can talk to most lenders. They do it. If they don't, you might want to talk to another lender. Okay. So now that we do that, we need to know the different types of approval. So you got your credit pulled. We're working on credit, which we're going to go over details on how to get your credit ready. Okay. The next is the different types of approvals. So there's 4 types of loan approvals that you want to focus on in 2023. There's the pre-approval, which is easy. The lender runs a credit, soft credit pull, right? Won't hurt your credit score. Some lenders can take the soft credit pull and get you an automated approval. Okay. I would want to know with an automated approval because most lenders, builders, sellers, they don't want to see a manual approval. They want to see an automated approval by DU, desktop underwriting, or LP loan prospect, right? Which is Freddie Mac. And then some lenders can even get you an underwritten approval. Okay. So if you want to get that underwritten approval, you want to make sure that you're a self-employed person, you're on commission, and your income's not kind of shaky. You want to get that underwritten approval. And last but not least, the final approval. Okay. So these are the 4 approvals you want to focus on. Of course, when I talk about final approval, a lot of times the only thing missing from your final approval is the property. So let's say you get approved by a lender. When you get the final approval, that means you already went through the pre-approval, the automated approval, the underwritten approval, and now you also cleared all your conditions. You know, my wife and I worked on our Christmas picture before in the early months of November. People spend more time prepping for Christmas pictures, birthday parties. Have you seen those Pinterest cake tables? People put so much energy into items like that. Why aren't they putting it into home ownership? Okay, get your credit ran. Know where the credit needs to be. If you got to delete stuff, remove stuff, work on it then. Okay, have the lender look at your income, look at your asset, issue you a pre-approval, on underwritten approval. And if you are not a wage earner, let's say you're using a lot of overtime, it's sporadic. If you're self-employed, if it's something weird, go ahead and get that underwritten approval. It's also best you get those conditions cleared. Let's say they approve your loan, they issue you an underwritten approval. Next is there's conditions that need to be cleared. Once you clear them, you have a final approval. The last thing you're going to need is once you find a home, that's why when you get these approvals, you want to get approved at the max. We're going to go over that on how to do it in our Wednesday night, 6 p.m., December 14th live on our webinar, okay? Bring your food. I'll have my noodles, okay? So you want to make sure you clear these conditions. So when that right home pops up, you're ready to go. You're good to go. You don't want the right home to pop up like, oh my gosh, I wasn't good to go. Remember, there's only 750,000 active listings in the United States, not counting pending sales. In early 2000, there was 1,050,000 homes. Did you know by February 2022, before rates pulled back, we had only 350,000 active listings in the United States, right? Of course, when rates went from 3% all the way to 7.5%, and now back in the mid 6s, and now we have 750. Imagine going into 2023 with only 750,000 rates pull back. You don't think most people have learned their lesson? Like, hey, if rates pull back, I'm jumping on it. You don't think hedge funds and institutions are sitting there, right? JP Morgan's sitting on $1 billion. I think BlackRock's got 50 billion. They're gonna buy up more property. So you don't want to sit there working on your pre-approval while all this is happening and something pops up and you want to grab it. Okay. So you want to make sure you have that. So now that we've been approved, we've cleared the condition. The next step is the getting on a realtor's home search. Okay. Like I said, there is a lack of inventory, right? Get on a realtor's home search. They will have more accurate listings and not clickbait listings. New listing updates in 30 minutes versus 48 hours. As rates pull back and before the seller wakes up and realize it's a seller's market, you want to get on a local real estate agent's home search. Because when someone lists a property on the MLS, right, you will get notified in 30 minutes. If you go through the other main companies, you know what I'm talking about. Okay, I don't want to throw out their name. And it's free. They take 48 hours to update sometimes because their servers are so big. Also, you got to comb through all the BS listings that have already sold. And you get all excited about a home, right? When you see a home, you're already picturing the furniture. How are you going to park your car? Where's Timmy's room going to be? Okay? And that home was already sold 2 weeks ago. So you got to comb through all that clickbait, all these fake foreclosures, notification of default, because how these companies make money is you click and you want to see it and they sell your data to another real estate agent. So they got to keep on as much data as possible. So it's called inaccuracy. Do you want to be chasing down a home that doesn't exist? We call that a ghost fart. You know what a ghost fart is? You smell it, but you never see it. We don't want no ghost farts in 2023. To utilize the best strategy to buy a home in 2023, we got to be able to get on a real estate agent home search, okay? Just let that agent, hey man, don't pressure me. Set my parameters. Once you've been approved, you know your parameters, set it with your realtor and start getting listings in, okay? Start seeing these homes. And you want to get them every 30 minutes. So you want to be able to see it before everyone else, because the reason why it's important to see it, so you can come up with a strategy to get the lowest payment, okay? So now let's talk about the lowest payment. So now that we got you approved, okay? And now we put you up on a realtor's site and you can see all these homes before everyone else, like, I don't want to get on a realtor's site. I'm not ready to get sold, right? You're not going to get sold, right? Just let the realtor know up front. These tools are available and they don't cost you anything. Get on a realtor site and see these homes, okay? So these are the different ways to lower your payment. For a buyer with less than 20% down, you can remove PMI. There are different strategies to removing PMI. You can do a permanent buy down, a temporary buy down. I forgot on here, you can do ARMs, right? There's different ways to get a lower payment. Like I said, our goal is to get the lowest payment, the lowest price. And the only way you can get the lowest payment, the lowest price, and qualify for more is you gotta understand how these buy downs work. And you need the seller's help. I'm not looking for you to come out of pocket outside your down payment. Maybe a little extra, depending on which type of program you want to utilize to get the lowest payment. But the goal for the 2023, the best strategy to get a home is to make sure you come out of pocket at a minimal, right? We want to minimize your out-of-pocket expense and maximize your monthly savings. And the only way to do that is to follow these phases of strategy. Phase one, get qualified with a soft mortgage credit pool, okay? Know where you stand. And now you do, if your credit isn't where it needs to be, to utilize the best deal, because in our strategy, we're trying to get the lowest interest rate. So you guys start working on your credit. While you're working on your credit, you see these homes popping in because you're on a real estate agent home search, okay? You're not on, it rhymes with Willow, or Bluefin, but it's the other one, you want to get on your own realtor's home search. So you see that stuff pop up, bam, bam. I like it. Okay, how long has the house been on the market? Cool. Who's the agent? Let me look them up. They're a brand new agent for sure. My agent is like a shark. They OG, triple OG. Let them write an offer and muscle my way in to get some closing costs. Okay, get that closing cost, right? Get that closing cost. So when you're negotiating, and I see it happen so much, you ask for too much and you can't use it because you're not under the right program, right? Max closing costs based off the purchase price, okay? If you're going with conventional 3% down, all you can get is the matching 3 to 10% down. You can get a 3% max concession. Conventional 10% down, 10.01 to 25% down, you can get up to 6%. 25.01% down, you can get up to 9%. Conventional investment, 2%. FHA, 6%. VA, 4% in closing costs. It's important that you know this, because if you maximize the buy down to get the lowest rate so you can get the lowest payment, you might have to come out of pocket some closing costs. Let's say the seller was willing to give you way more, but because you went 3 to 10% down, you can only use 3%. Use the money, get yourself a new roof, get yourself an HVAC, get yourself new carpet. There's different strategies, which we're going to go over on Wednesday, how to maximize the best home buying strategy in 2023 on Wednesday, December 14th, 6 o'clock. Click the link in our description above. Click the link in our description to go ahead and sign up. Right? We're going to go over different strategies to get new flooring, to get new paint. Oh, they don't want to do it because they want to close fast. There's ways to do it now and get it paid for it as soon as it closes, so you can move into a brand new home without paying that HOA payment, right? So definitely, guys, that's how you're going to maximize it. You got to get approved first. Work on that credit, right? Get to where you need it to be. Get that underwritten approval, right? Clear those conditions. Get on the realtor's home search. You're the first one in. I'll size it up, right? Size up my competition. Who's the other agent? Oh, it's a Johnny come lately. That one's someone brand new to the system. Oh, I'm getting it, right? Oh, it's on the market for a week. No one saw it. Let me get this. Okay, rates pull back, which we'll go over in just a second. Before the seller wakes up, rates pull back. We got to get it now. If you wait too long, you're not going to get closing costs. Well, I just want to get a cheaper price. Trust me, the lower the price, it doesn't help out as much as getting the seller to cover cost. Out of pocket, also a lower rate on the buy down instead of a higher rate is going to get you more payment towards your principal than interest. So you don't want to wait too long when you're bringing more buyers back in the market, okay? So here are the indicators you want to pay attention to maximize the best buying strategy in 2023 to get the lowest payment, the lowest price, and qualify for the max and more buying power to get a better home that you deserve, because rates are pulling back. You got to pay attention to these indicators. And we're going to do a deep dive on these indicators on our Wednesday night. But here is a little sample for you guys, okay? So you want to watch what to watch for the lowest price. High inflation, low unemployment. Are mortgage rates still above 6.7? You want to pay attention to builders' incentives. You don't have builders' incentive. If offers get accepted quick, no bidding wars. Okay, forbearance foreclosure rate stays low. Okay, so we're gonna watch these indicators as a collective, right? Just you and me. Every morning, dog. I mean, every morning we watch these. We watch these indicators. Okay, high inflation. If inflation is high, the longer it stays higher, more prices will come down because they're not pivoting yet. So for those of you who want a low price, you want inflation to stay high for a season. You want unemployment to stay low. That means they got to keep turning that heat up on the rates. The more they turn it up, some people are going to force the sellers going to bring prices down, okay? They won't collapse because there's just not enough homes. Unless unemployment goes up to some degree where more people who are homeowners have to let go of their home, okay? So we're going to show you how to watch those indicators. Mortgage rates. If we're going to stay above 6.75, I think if we're above 6%, people are still not going to buy it. People are hesitant because they don't qualify for what they want. But I'm going to teach you a strategy on Wednesday night on how to make sure you don't wait too long. If rates drop too much, too many people are going to come back in and you can't get the seller's help, okay? So you want to watch rates. Builders' incentives. I'm not buying new construction, but I'm subscribing to all these builders' incentives, because if I keep getting incentives in my email, it's still a buyer's market. If you see less and less incentives, it's about to turn. You better go ahead and start writing offers before it gets too late, okay? If you see offers getting accepted too quick, your realtor will tell you, hey, offers are getting accepted way too quick. It's still a buyer's market. In a seller's market, they're going to take their sweet time. Are there bidding wars? We're going to go over that, okay? Sometimes you want to ask around, you want to talk to us, put offers out there just for giggles, right? Hey, I want to write. Don't tell your agent. You're not writing the offers. You're not going to get carpal tunnel or arthritis. Okay, just say that you have a offer. If they jump on it, you know you got to backtrack a little bit, right? Backtrack a little bit. And also, we want to check forbearance and foreclosures. If forbearance and foreclosures start picking up, and out of the 750,000 listings, it starts going up to 775, 800, 850, 900, let's pump our brakes, okay? We want to watch these indicators. And if you don't know what to do and you're a realtor lender, you know, DM me, follow my page, Uncle Min, right? What's up, what, right? But if you're a consumer, you're on the right channel. What's a mortgage? We're going to let you know every day, on these indicators. But if you want to understand it for yourself, definitely check out Wednesday night, right? So that is the main strategies, which we're going to do a deep dive on Wednesday, December 14th, 6 p.m. Pacific Standard Time. Check out the description in the link, check out the link in the description to go ahead and register, 6 p.m., okay? Pacific Standard Time. I'll have my noodles. Hopefully you have your meal as well, okay? If you have questions on this strategy, definitely give us a call if you can't make it, right? Or message us, right? Leave a comment below if you have questions. Don't forget, guys, hopefully you found this content useful. If you did, do me a huge favor. Please like it, and please share it with someone you know that is interested into changing their stars and becoming a homeowner in 2023, okay? Don't forget to follow us on Facebook, YouTube, Instagram, TikTok, and LinkedIn. Hopefully I brought you value tonight, guys. Seems like there's not a lot of Q&A. Seems like everyone's holding on till... all right, here we go. Jackie's got one question. You're the GOAT, bought in 2020, rate under 3%, drop PMI, 25 months, takes advantage of the low advantage of increasing home prices, all from your info. Now I'm considering a HELOC. There we go, Jackie. There we go. There you go, Jackie. Killing it. Yes. Remember, when you get a HELOC, you don't pay interest till you use the money. And right now, rates are higher. But if rates pull back, your payment will also drop on your HELOC, okay? There's a lot of flexibility with HELOC. If you need help, DM me. If not, go to US Bank. Go to Bank of America. Has some smoking deals on HELOCs right now, right? They're doing negative below prime. If you want more help, please give us a call, 714-790-9697. 714-790-9697. You can call us. Text us for every shy guy, shy girl, or shy person out there. We want to make sure we give you certainty in the biggest investment you're going to make in your life, home ownership, all right? Best way to improve your credit score. We're going to go over that on Wednesday night, 6 p.m., okay? Wednesday night, 6 p.m. We're going to go over how to improve your credit so you can maximize the best deal in 2023. Why does it seem like FHA is the way to go? Lower rate, more concessions, percentage-wise. Remember, Anthony, on FHA loans, the upfront MI, you got to tag on 1.75 and monthly MI. I would probably go FHA if my loan amount is probably under 300 grand. Above that, the MI gets really expensive. And remember, PMI is not tax deductible anymore. It used to be, okay? On conventional, PMI will fall off. A lot more flexibility. But Anthony, the best way to find out is to give us a call, 714-790-9697. Give us a call. Let's do a comparison breakdown, and you make the choice what's best for you and your family. Only you know, okay? So give us a call. What are requirements for 1.1 million? 10% down. New Rock, 10% down. 43% DTI, and you want that 720 FICO or higher. 760 is going to give you the best deal. Remember, on jumbo loans, there are no monthly PMI. So 10% down, you're Gucci, right? 10% down, you get a lower rate, and there's no PMI. Hopefully that helps you out. We want to buy June or July. When should we do a soft pull? Santos, do a soft pull now, and so you see your range, right? So when I buy something, I have a range. If that range kicks in June or July, you'll be ready to go. Clear your conditions. It doesn't hurt your score. I would check it out probably first quarter, right? Sometimes February, March. If there's things you need to work on, if you know you got smoking credit, then you're chill, okay? If you're like borderline, you know what, I had some lates 2 years ago, hasn't fallen off yet, I would know where you stand, because maybe you can position yourself. Imagine, conventional loan, 740 FICO or higher, the PMI is cheaper. It's almost pennies on the dollar. It's not even worth putting 20% down. But if you got that 680, your rate's the same as someone with a 740 if you're going to go with that new program, but your PMI is still expensive. So you want to make sure you give enough time to let your credit breathe, work on it, attack it. There's different strategies where it might take 30 days, might take 60 days, might take 120 days. So, but it's good to know a range. It doesn't hurt your credit score, okay? And while you're doing that, Santos, you want to make sure your profile doesn't change, your job doesn't change, or your income doesn't change, your deposit. There's no some random big deposits in there. So for me, if you're gonna buy June, I would probably February, March, I would probably get on it, okay? Hopefully that helps you out. All right, guys, I really appreciate everyone who supports this channel. So thank you for everyone who commented, who stayed, and watched the rest of this. So guys, also do me a huge favor. If you're not following us by now, please hit that subscribe and notification button so you're notified every time we put that good out there, right? We put that good content. We want you to get notified. The last thing I want you to do is buy a home with a bad deal on my watch. Here, Bia, can one go from FHA to conventional? If so, how long to refinance when you start FHA? I would wait till 6 payments because you could use the new appraised value BIA to go from FHA to conventional. Hopefully that helps you out. Okay. Are there chances to lower the 10% down for first-time home buyers? Not for The Rock, you jumbo player, right? They're gonna want 10% down. There are companies that do 5% down, but the rate is pretty nasty. I don't do it, but there are a couple people out there. But I would just do the 10% down. You're gonna get the better deal anyways. Especially if you go 5% down, the DTI is gonna be really low. They're gonna want like super low DTI. If you got that super low DTI, you might want to DM me. I know 2 brokers that will do 5% down, but it's not great. But if that's what you want, hit us up, okay? All right, guys. We want to end all our episodes with our attitude is gratitude. Without you, there is no us. So thank you guys so much and have a great night. And I can't wait to see you December 14th, 6 p.m. Click the link in the description so you can register.